the United States has announced a 26% reciprocal tariff on Indian imports, which will come into effect from 9th of April. This decision comes as part of a broader strategy to address what the Trump administration describes as long-standing trade imbalances. Now, according to President Donald Trump, India imposes a 52% duty on American goods while enjoying near-zero tariffs in return. In fact, the US has also pointed to non-tariff barriers such as currency manipulation and regulatory hurdles, claiming their removal could boost US exports by $5.3 billion annually. While the reciprocal tariff could hurt Indian export competitiveness and investor confidence, some sectors like apparel and footwear may gain an edge over competitors. It's worth noting that the current trade deficit between US and India stands at $46 billion. But India, in fact, is carefully examining the implications of US President Trump's new reciprocal tariffs, including a 27% levy on Indian exports. Now, the Ministry of Commerce and Industry is engaging with stakeholders, including exporters, that is, to assess the impact and explore opportunities arising from this shift. Discussions between Indian and US trade teams continue, aiming for a mutually beneficial bilateral trade agreement. But important to note here, it's not just India. The Trump administration has also imposed a significant 34% reciprocal tariff on China. But remember, this is in addition to the existing 20% tariffs Washington had previously imposed on that particular region, that is.
April 2nd, 2025 will forever be remembered as the day American industry was reborn, the day America's destiny was reclaimed, and the day that we began to make America wealthy again. We're going to make it wealthy, good and wealthy. For decades, our country has been looted, pillaged, raped, and plundered by nations near and far, both friend and foe alike. Foreign leaders have stolen our jobs, foreign cheaters have ransacked our factories, and foreign scavengers have torn apart our once beautiful American dream. We had an American dream that you don't hear so much about. You did 4 years ago, and you are now, but you don't too often, and for many years and decades even, you didn't hear too much about. Our country and its taxpayers have been ripped off for more than 50 years, but it is not going to happen anymore.
US President Donald Trump signed the executive order on reciprocal tariffs on America's key trading partners, including India, on Wednesday. He called it Liberation Day for America. With the executive order, 27% reciprocal tariffs will be imposed on India, 54% on China, and 20% on the European Union, among others. The baseline duty of 10% will be effective from April 5th and an additional 17% from April 9th.
India, very, very tough, very, very tough. The Prime Minister just left, and he's a great friend of mine, but I said, you're a friend of mine, but you're not treating us right. They charge us 52%. You have to understand, we charge them almost nothing for years and years and decades.
Trump's argument is that reciprocal duties will help boost domestic manufacturing in the US and reduce the trade deficit. The US is facing major trade imbalances with countries like China.
It all started with the announcements when the President Trump came into power, from first saying that there is America first, and then the reciprocal tariffs as a mean to harness the manufacturing or boost the manufacturing in US and overcome the fiscal deficit. There, India's rate has been fixed at 27%, and it was always 27% as per the order which was signed. I think, yes, somewhere the 26, as you mentioned, was coming out, but it is 27% as per the orders. What will happen on 9th? That first, since there is 10% on April 5, there will be another top-up of 17% on April 9th to take the 10 to 27%.
Certain areas have been exempted from the reciprocal tariffs. Strategic items such as pharmaceuticals, semiconductors, copper and energy products like oil, gas, coal and LNG have been kept out of the purview of the tariffs announced.
So there was a lot of concern around pharmaceuticals. They have been exempted. Petroleum products have been exempted. So impact in that sense would be felt on 80% of India's exports and not on 20%, which are, say, petroleum products, pharmaceuticals, semiconductors, which have been exempted. The third important point is India is the only major economy on which reciprocal tariffs have been slabbed, who is also negotiating a bilateral trade deal with the US. So, and India has been very proactive, since February this year, budget of India, India has specific focus to US, has reduced duties on many products.
India could maintain or even expand its agricultural exports to the United States despite the new tariffs as the competing nations face even steeper duties. In addition, experts believe the Indian IT industry may not get much of a hit due to the reciprocal tariffs.
I think IT sector does not get hit that much, which is a positive news. On the other hand, electronic manufacturing per se could get impacted a little bit. On the textile segment or agriculture segment, you could see some hits. But again, other countries with which India competes on these exports are also tariffed at a very high rate. So while product specific tariff impacts are not being felt that much, but the change in the global world order where the US inflation is bound to rise with these very high tariffs, and maybe the growth rate goes down across the board.
Sectors that could be negatively impacted by the reciprocal tariffs include gems and jewelry and the steel and electronics manufacturing industries. The steel and aluminium industry in particular could become more vulnerable to low-cost steel imports as countries impacted by the US's tariff move may divert their shipments to the domestic market.
Well, as far as iron and steel is what I can comment on, I think we would lose about $4 to $5 billion of export out of the 20 billion that we are doing engineering export to USA. Currently, we are 20 billion to USA. I think in the first year, we should lose about $4 to $5 billion on this, with this 27% duty.
The first shock wave of the duties imposed on about 60 countries was witnessed by traders in the stock market as it experienced a sharp decline in early trade on Thursday, dragged down by IT stocks and weak trends from the Asian markets.
The stock markets have initially shown a panic reaction, but as time progresses, I think the stock markets would settle down because the companies which are listed on the stock markets will be the ones who will be impacted. And if I name some of the sectors, we can take leather, we can take gems and jewelry, we can take automotive components, we can take seafood, some textile companies here and there. So therefore, apart from these companies, I really don't see impact. Well, the overall export to the US for these companies, for those sectors, is going to be probably 3%.
The Indian government, on its part, is closely monitoring the situation. According to the Ministry of Commerce, it is engaged with all stakeholders, including domestic industry and exporters, on the issue. Experts, however, suggest that the tariffs imposed by the US will bring up further opportunities for India in the trade supply chain.
I think the exports to US will increase and the orders will start coming. Everybody was waiting for the tariff to come. So since the tariff has come, I think the importers will start sending the orders. Maybe from this month only, it will pick up in May. And I think this is a high time for the Indian exporters as well to improve the quality, improve the production, to cope up the demand. I expect the demand is going to be much more as compared to last year.
During the visit of Prime Minister Narendra Modi to the United States in February this year, the two countries announced negotiations for a bilateral trade agreement with an aim to increase the trade to $500 billion by 2030. Trade representatives from both the countries are aiming at finalizing the first phase of this pact by September-October this year. The trade agreement will cover a wide range of issues of mutual interest, including deepening of supply chain integration.